Hello, this is John with Medicareline in Colorado. Today, just wanted to take a few minutes to go over the cost of Medicare. And usually, when I talk about the cost of Medicare, I like to talk about the two main components of what goes into the cost. And those are, I'm going to borrow two accounting terms, and those are fixed costs and variable costs. And we'll go over the difference in what each entails, and I'll also define them. And so let's dive into this. So you have fixed cost and you have variable costs. And basically, in general, fixed is just something that doesn't change. So you're going to be paying, just think of it as rent. If you pay rent, if you live in an apartment, if you have a mortgage, for example, on a house, those payments are fixed. Now, there's slight variation over time, like in 2-3 years, you're not going to be paying the same amount, but usually within a year or two, they're fixed. So you kind of predict how much you're paying for every month. A variable just means that it can go up or down. And in this context of Medicare and how much it costs you, variable can go up or down depending on whether you use the plan or not. Whether you use, let's say you go into the hospital or you have a doctor's visits. So every time you use the services, the cost can be variable, okay? And because you just don't know. You can go 6 months without seeing a doctor, you're fine, and then all of a sudden you have to see the doctor. So all of a sudden you have variable costs. And also they're kind of hidden costs, so you don't really see them up front. Okay, so just to bear that in mind. So those are the two main components that go into the cost of Medicare. So let's talk about fixed costs. Okay, fixed. So obviously with Medicare you have your Part A, and Part A is your hospital. And most people do not pay a premium. They don't have a fixed cost for Part A. And what I mean by that is it's otherwise called as premium free. So if you work 10 years or 40 quarters, you generally don't pay for Part A premium. You got your paycheck, you see on your paycheck Medicare tax that you've been paying all those years goes into your Part A Medicare. If you don't qualify for premium free Part A, then the cost can be pretty high, somewhere in the neighborhood of $411 per month. So that's pretty high. But most people don't pay for Part A. All right, going down, fixed cost. Let's talk a little bit Part B. So what are your fixed costs for Part B? Well, first of all is your monthly premium that you pay. And most people in 2016, you will pay, if you just turned 65, the amount is about $121.80 according to Medicare.gov. And that's per month, okay? Most people will pay the same amount that have been receiving Social Security benefits, and that's about $104.90 per month. So you can pay either of those amounts, but basically if you join into Medicare, and those fixed costs, those premium amounts per month are determined based on your income. So they can go up, but it's basically where you start. And it can go up from here depending on whether you file your taxes jointly, and it can go up to $389 based on whatever income you make. But basically, if you're at $85,000 individual, $85,000 or less, you'd be looking at those amounts. If it goes up from here, and I believe for couples is 170,000 if you find jointly or less, you're going to be looking at these amounts per month. And again, those are fixed, they can go up based on whatever Congress decides, but usually those are fixed costs, okay, for Part B. Another fixed cost is your Medigap policy. If you have a Medigap policy, and some people purchase a Medigap policy, um, this will range anywhere between, depending on what plan you have, Plan F or Plan G, or some people have Plan N. Usually they pay a monthly premium anywhere between 120 to and upwards of 160, let's say. And this is just an estimate, and this is per month, okay? So this is a fairly fixed cost. And the way I say it's a fairly fixed cost is because you will experience increase. If you've had a Medigap policy for 5 years, most likely you've experienced at least 3, if not more percent increase in your premium. So those premiums can go up. However, within a year or two, depending on which insurance carrier you have, you may not experience an increase. So that's why it's still a fixed, but it has the potential to increase. I mean, it will increase. So it's just to bear that in mind. Also, a Part D, which is your prescription plan. So Part D is your prescription plan. This can be both. It can be fixed or variable. And it's fixed if you purchase a standalone policy. If you have a Medigap policy and you purchase a Medigap policy and you purchase a standalone plan, it's usually a fixed premium amount. Again, that you can experience an increase here and there, but it's usually a fixed cost, and it can be zero all the way up to, I've seen $40 a month or $20 a month. So that's just to bear in mind. So, and it can, variable is when you combine it with a Medicare Advantage policy, okay? And it's variable. You could be paying something, you cannot be paying something. And also to bear in mind with a Part D prescription plan, you also have to consider what they call the donut hole. The donut hole. And I can make a whole video about this alone. Basically what that is, once you reach an amount that's called what they call a catastrophic amount, then you'll have to share in the cost. And again, I can make a video about that, but just so they bear, that's the variable cost of Part D. Okay, so we talked mostly about fixed costs. Let's talk about variable costs. Variable. Again, variable is based on use. So it can go up or down. If you don't see the doctor a lot, let's say a year goes by and you only saw the doctor once, well, you're not going to have much of a variable cost there. You haven't been in the hospital. You're not going to trigger any variable cost. But if you do use it, if you have to see the doctor a lot, if you go into the hospital, then the costs can get variable. You just don't know how much it's going to cost you, and you can't predict it. So for that reason, I also like to call them, they're kind of hidden costs, variable costs. I kind of associate that term with hidden costs. So let's say for Part A, what are your variable costs for Part A? Again, so if you go into the hospital, you have a $1,288 deductible. Okay, so you'll have this cost if you go into the hospital. Before your bill kicks in, you have to pay this amount of money. Okay, so it's $1,288 deductible, and this is for each benefit period. So if you go into the hospital a lot, you're going to be incurring a lot of costs here. And if you don't go in the hospital at all, you don't have to pay this amount. That's why I said it's variable if you use it. So if you go in the hospital, you pay for this. If you don't, You don't have to worry about it. Again, for the hospital, you also have, so this is a deductible, you also have coinsurance. Coinsurance. And these are terms that you can look up. If you have questions, you can also drop me an email or call me directly. Go to the website, Medicareline.org, and you find my phone number there and email on the bottom where it says contact us. And so I can go more into if you have questions about these terms. But coinsurance is also, if it's up to 60 days, up to 60 days, it's free. So there's no coinsurance, free. Okay, if you have to go in the hospital, up to 60 days is free. You don't pay anything. There's no cost there. Now you still pay this $1,288, okay, before Medicare kicks in and covers for the rest of the bill. So coinsurance is free up to 60 days. If it's past 60 days, which is highly unlikely, if you have to be in the hospital for more than 60 days, 61 days to 90 days, then the cost can go up a lot. So let's see, 61 to 90 days, you're looking at $322, and that is per day. Okay, so this is a very, very high variable cost, $322 per day. And then if you stay for 91 days and up, then the cost can go up from there, I believe. So it's $644, and this is per lifetime resource day, and I can talk more about that term if you have questions. But basically, it just keeps going up. So you can see how it's variable. Okay. We're still on variable. And Part B now. So we talked about Part A. You have that deductible, $1,288, and free if it's up to 60 days. If it goes over 60 days, then it's $322 a day, and then it goes up from there. Part B, variable costs. You have what they call the deductible again, which is $166, which this just went up per year. So this is per year. This is not per month. So this is per year. And again, you do not, let's say you have a doctor's visits, because Part B covers your doctor's visits, you know, your doctor's visit was $100 to see the doc. So you're going to have to pay $100 for that visit, okay? Because you haven't reached the 166. Now let's say in a month or two you go again to the doc, and the doctor is going to charge another $100 for the visit, right? So right here you're at $200. So you just exceeded the 166, right? So then your Part B kicks in, your Part B coverage kicks in, because you already paid the 166, and then if you see the doctor again for $100 a third time in a year, then this is covered. But it's covered at 80%, okay? Because you're still incurring a 20% coinsurance cost, okay? Remember that 80-20? So Medicare, once you pay that 166 deductible per year, once you reach that amount, then it kicks in, but it kicks in at 80% coverage. So you're still liable for the 20% coinsurance coverage. And again, this is variable. You don't know how much this is going to be, depending on, you know, how much the charges are. So so bear this variable cost in mind, the 20% coinsurance. Okay. Let's move on. Part C of Medicare. Part C. Now we're still on the variable. Okay. Part C is your Medicare Advantage. Medicare Advantage plans. And those are plans that are sold by private insurance companies. AARP, United Health, Humana, Aetna. I'm not sure if Aetna. Colorado does in Colorado. Kaiser is a big one. Kaiser Permanente, and so those plans are sold, and you can purchase them. And usually they have a zero premium per month. So you don't pay anything per month. Sometimes they'll have $20 per month or $40 per month, depending on which plan you go with and what they cover. But chances are, if you have a zero premium per month, um, it's variable if you start using it. So let's say you purchase a Medicare Advantage, and it's zero per month, right? Well, you still have to deal with deductibles, coinsurance, and co-payments. That's right. They're adding another extra payment here. So co-payments go with these Advantage plans, okay? And they can be $20 copayment, $50 copayment, and you have to look at each plan individually. And it's a variable cost because each plan is different and the premium varies by each plan. So you have to compare the cost. So it requires a lot more analysis of what what you're willing to trade in for the zero premium a month, because obviously you're not paying anything per month. But if you have to use the plan, meaning if you have to see the doctor, if you have medical issues, you're taking a lot of medications, so you really have to dig into each plan, what you're looking at. Don't just trade in zero premium, because you're going to have a lot of those variable costs. And that's why I call it their hidden costs, because if you're not, they will spell it out in the plan, but you just don't know how much you're going to end up paying. Okay, so it's very important to really look at this and determine if it's an advantage for you or not to buy those plans. Now they will include, I will say, they will include your prescription plan in this, so you don't have to buy a standalone plan for this. So Part D is usually included in Advantage plans. Okay, so we kind of covered everything. Obviously, this is just scratching the surface. But if you, let's say, buy a Medigap plan, and I just want to point this out, Medigap plan, whether it's plan F, G, or N, those are usually what I recommend. And if you buy any of those plans, you will pay that monthly premium, okay? That monthly premium, whatever it was, 120 to 160. I'm just giving you a range here, per month, okay? Per month. If you purchase a plan F, okay, this will cover everything, okay? Meaning, what I mean by that, it will pick up your variable costs, both for Part A and for Part B, okay? So all those deductibles for Part A, the $1288 deductible that you have to pay, that's picked up by this plan. So you don't have to pay anything out of pocket. If you stay for more than 60 days, you don't have to worry about that. It'll be picked up. If you have the Part B, the 166, remember we talked about the 166 annual deductible, it'll be picked up by Plan F. The 20% coinsurance, which is a very variable cost there, it'll be picked up by this Plan F and G. The only difference between F and G is G does not pick up the 166 annual deductible. And many times it makes sense to purchase a Plan G because of the difference in premium. You're going to be saving money with the Plan G. 10 out of 10 times almost. It's just what I see. Plan F, you'll be paying a little bit more in monthly premium, but for Plan G, for trading 166 a year, you're going to get that in difference in the premium. Again, this will require a specific quote just for you. So, but basically that's where you're at with those plans. So Medigap makes sense if you can afford it, and if you are more comfortable with not having too much variable cost. So if you're fine with just paying for the Part B premium, which is fixed, that doesn't change whether you go with a Medigap or Advantage plan, and just cover for all the variable costs with the Medigap plan, this would be the way to go. You will need a specific quote for a Medigap plan, so feel free to call me if you have questions about this. If you have questions about anything in this presentation, please feel free to call me. And you can go to Medicareline.org, call me directly from there, shoot me an email, or subscribe to my channel down below, or write any comments down below this video. Either way would work to get in contact with me. And hope you have a nice day and answer some of your questions, and look forward to talking to you. Thank you so much. Have a nice day.